Hi, I'm Simon Raspa, Director of Raspa Property Group, and here is your 2023 end of financial year market update. In today's short video, we're going to be covering these four main topics. Number one, interest rates. Number two, the rental crisis in Perth. Number three, general stock levels. And finally, number four, I'm going to give you some of my predictions. Okay, topic number one, interest rates. It's no secret that the RBA lifted the cash rate target to 4.1% at the last meeting. This is the 12th time in 13 meetings where they have increased the cash rate target. It is starting to affect borrowers, unfortunately, but what we are starting to see is inflation rate just starting to drop. Just very recent data is starting to show that things might be settling down. Topic two is the rental crisis. Now, in May, REBA recorded a vacancy rate of 0.7%, which is very, very low. To give you context how low this is, in May this time last year, our vacancy rate was at 1.1%, which was very low then. REBA normally says that a rental vacancy rate between 2.5% and 3.5% gives you sort of a balanced market. So anything lower than that is going to push prices or rents up. One case study is a property we recently leased in Beckenham. We almost had 700 inquiries. This is a 2-bedroom apartment. We had over 100 groups of tenants at the home opens and 30 applications. So that's 30 applications we had to vet. We had to check against the tenancy database. We had to check their income to rent ratio. We had to do all those checks on 30 applicants. So that shows you on a small 2-bedroom apartment in Beckenham what can happen in this market. Okay, so from tenants, which are doing it really tough and really, we really feel for, it's not much better for buyers. Stock levels themselves are getting really low. When I say stock levels, I mean for sales now. So I normally use my rule of thumb is if you've got 12,000 properties on the market, it's a balanced market. In 2019, I remember the levels getting to 17,000 properties on the market, which was, a huge buyer's market. Where we are today is now around 5,500 properties only. That is hardly any stock. That above anything, above interest rate rises or anything else, that is still putting upward pressure on the market. So to give you a bit more of a feel about that, we had 5,500 properties on the market now. This time last year when things were going crazy, we still had 8,500. So we've got even less properties on the market now. So if you're a seller, it is a great time. We are seeing multiple offers on pretty much all our properties. I'll give you some examples. We recently sold 6 Marble Rise in Coogee. We had 6 offers on that. 15 Gatno Grove, Bibra Lake, 4 offers. 67 Greenhow Way in Gosnells, 15 offers. 20 Short Bend in Harrisdale had 13 offers. And a property 1 Euro Close Bertram, 4 offers. These aren't the exception. This is the new normal. And it's the way we see it is to get the best price for our sellers, you've got to write offers. The fixed rate mortgage cliff is also a lingering elephant in the room. For those who are unaware, in around 2020, a lot of savvy buyers fixed their interest rate when the cash rate target was at 0.1%. And as interest rates have risen, their repayments have stayed the same, which has put them in a good position. What is happening though is a lot of these fixed rate mortgages are starting to expire, and we're going to see now in June all the way up through October, November, a lot of these people jump on from like a fixed rate mortgage onto a variable rate. Now, what effect is this going to have for people that are going from a massive jump in interest rates and repayments? Well, time will tell. I've had a lot of buyers expect we're going to have a lot more distressed sales. I haven't seen evidence that that's going to happen yet. But like I said before, we'll be able to monitor this, and we will know in the next few months if this jump to the higher interest rate is really going to force people to sell their home, which will then raise stock levels. Okay, future predictions. Now, I don't have a crystal ball, but this is where we're seeing things going to go. So the big questions I get asked at home opens is, do I see interest rates continue to rise? Now that is a very difficult question to answer. I'm not the RBA, but from what I've seen, the inflation rate is starting to fall, which gives me confidence that we might get 1 or 2 more rate rises, but I think then it'll start to settle. Now obviously that could change, but now that I'm starting to see inflation just slightly fall a bit, I'm feeling a bit more confident. Number 2 is that elephant in the room we talked about before, the fixed rate mortgage cliff. Is that going to have an impact on prices? Look, our stock levels are so low. I don't think that even if we do see a little blip and a little increase in some distressed sales, which we hope we don't, but we might, I don't think it's going to change things. Stock levels being at 5,500 is still so low. It's just not enough supply, nowhere near enough supply. So we will still see a positive increase in prices. And finally, with renters, is there any short-term relief for tenants? Unfortunately not. It's something that can't just change overnight. We just need more housing. If you are thinking of renting out your property, you're doing your country a service or your state a service, because we just need more properties to lease. With so much momentum in the sales and rental markets, I can't see things slowing down for the next 6 months. But if you would like to know the new value of your home, you might be pleasantly surprised. So please get in contact with us. I'm Simon from Raspa Property Group. Hope you found this video informative. And if you have any questions, please reach out to us anytime. Thanks for watching.